Hello and welcome to your weekly Go No Go show. My name is Tyler Wood. I'm a CMT charter holder, and today, as always, I am joined by Alex Cole. How you doing, my friend?
Doing well, thanks. Nice week this week. The weather, finally the rain has stopped.
Hey, you guys are getting flooded out in the New York City area, and up here we're looking at snow. So let's let's dive into something more interesting. Taking a top level view across the asset classes from a trend perspective. Alex, walk us through this Go No Go heat map.
Yeah, I mean, it's interesting. The trends are the same as they were last week. A little bit of change in the colors. You see the equity map across the top. That's that first panel has painted a string now of weaker pink bars. We know we've rallied for the last 4 or 5 days. Today, we kind of are flat. We've sort of we're where we are when we open. So we'll see where we finish today. But definitely a bit of a rally this week, causing those pink bars. But still, the weight of the evidence says we're in a no-go. So possible relief rally, I suppose. Treasury bond prices also in a no-go, but yes, those two have weakened to paint pink no-go bars. So a little bit of weakness in the no-go trend for Treasury bond prices. Commodities, we noted last week, rolled over quickly and hard to strong purple bars. Well, that's been the order of the week so far, all strong purple bars for commodity index. And then the dollar, after painting some aqua bars, showing some weakness in the go trend, has returned to paint a strong blue go bar at the moment today, as of lunchtime on Thursday.
Absolutely, and we know we got a jobs report. We got CPI inflation numbers coming in basically at expectation, softening the inflation narrative. Interesting to hear a lot of investors looking for that tradable low in the bond market. Alex, these intermarket forces, even if you're not trading outside of the equity space, keeping an eye on some of these intermarket forces can help inform what kind of environment we are approaching. So a lot of green days, up days for the US equity markets. Let's dive in there first. Starting on the weekly time frame for the S&P 500, let's just use the SPY ETF. We have seen a rally over the last week and a half or so. And from this weekly perspective, right, one of the things we were talking about was the pullback within an otherwise secular uptrend. We talked a little bit about seasonality factors, September being a fairly weak month. Coming into October, we certainly see those seasonal patterns holding strong this year, and the market's trading according to what a lot of historical relevance has for us as investors. What draws my eye right now is where we're at with the GoNoGo oscillator. So from a trend perspective, US equity markets held go trend conditions. Remember, those are all lagging indicators. We're looking in arrears at where price action is coming from. But the oscillator quickly dipped below zero. We're retesting the zero line from below. That was the end of last week. And now here this week, we are back at the zero line from below. A lot of trading volume, and perhaps people finding that key support level right around 4,200 as a tradable opportunity.
Yeah.
If we dive into the daily basis, we get go ahead.
Let me just say something real quick there, Tyler, if you don't mind.
Please.
What's interesting here is that dip into negative territory for the oscillator, and we'll need that to come back above zero. If you notice over here, we were still in gold bars when we had that oscillator break back and then retest the zero line here. So you can see that this is a telling moment. If we get rejected by the zero line here, that could be something that leads to a longer correction. Perhaps this is a new lower high after another lower low, and then potentially long term we could see some color change. If we get back above zero quickly, then that would be really encouraging if we are thinking that we're in this longer term go trend. So very, very important what happens here. We don't want a repeat of what we saw earlier in the chart here.
Critically important point to be made there, Alex. Let's get into the daily view of this chart of the S&P 500, where we can see again the recent rally has not taken us out of no-go trend conditions. So we've got a strong form, that's those purple bars, strong trend to the downside. Weaker trend in a no-go condition is being painted right now in these pink bars, and here, the oscillator is telling a slightly different story, isn't it? This is midday, Thursday, October 12th, and we do see momentum oscillator breaking above zero out of that very small squeeze, showing us some positive or enthusiastic buying in the momentum readings.
Yeah, I think the next couple of days will be really key. Do we make a little bit of movement higher, or do we fall back into this sort of level? And if you look back across the chart, there's this really big congestion area where we've seen the lows here, we saw the highs here. So this sort of level here, we've got all of the support, like everybody's really banking on at 4,200. But what about all of this resistance up here as well? So we're in sort of this, really significant area of congestion. I think we'll need to try to get out of it to the upside, or we'll fall back into it to the downside.
Absolutely. Yeah. Great to point out. Markets can move in 3 directions: up, down, or sideways and range bound. And that can be one of the most frustrating environments for investors. Let's move to some of those intermarket forces at play. Let's start with a chart of the TNX, the 10-year Treasury yield, giving us a sense of perhaps a little stabilization in this yields for sovereign bonds. Alex, talk to us a little bit about what we're seeing from a trend perspective.
Yeah, we've certainly come off that most recent high. We saw those counter trend correction arrows telling us that price might struggle to go higher in the short term. We've seen some weakness in the trend. You can see the GoNoGo trend is painting aqua bars now. They were painting those strong blue bars for several weeks. But now we're seeing a little bit of weakness. And is this a higher low? Well, that'll really be determined by whether or not we can manage to stay at or above the zero line. Primarily, you've seen that throughout this entire stretch. So we don't want to see that broken, especially not significantly into negative territory. That depends who you are.
Yeah, exactly.
I was just talking about this as if it was a straight equity chart. But of course, if we do see this zero line broken and we see a deeper correction in Treasury rates, of course, that could be quite good for equities. So this little move off the highs perhaps helping equities rally this week. So it'll be very interesting to see what happens here. But from a pure go trend perspective, for this go trend to continue, the oscillator would likely find support at zero if this trend is healthy. So if it doesn't, that's probably a good sign for equities. If it does, perhaps an indication that this is a new higher low for Treasury rates.
Absolutely. Perspective is everything, isn't it? If this was a investable security, we'd be rooting for that go trend to continue. Let's look at this one other way, Alex. Let's pull up a chart of the TLT. So in that heat map, we were looking at Treasury bond prices. So against the 10-year yield, right? Inverse moves in bond purchases are going to bring yields down. And so what we're seeing, what a lot of analysts were talking about as a potential tradable low in the bond market at the end of last week, we have seen this week bring us in a bit of a rally for bond prices. And we have seen the GoNoGo oscillator rally back to that zero line on heavy volume, but we have not yet broken through into positive momentum for this chart of TLT. Yeah. Let's move on to a chart of the US dollar. Another big headwind for risk assets broadly, US equities specifically. We have seen the dollar pulling back from that high that we saw the end of September, pulling back to the zero line on the momentum oscillator and building a go-no-go squeeze. This is that moment of tug of war between buyers and sellers, where we do see a bit of indecision from a momentum perspective. Today itself, the dollar rallying a little bit off of that swing low. Alex, talk to us a little bit about what you would see in terms of expectations from this point forward.
Yeah, you hit on most of it there, but that support does seem to have been found at that prior low, a very short-term basis. We were talking a couple of weeks here on the daily chart, but that looks like another low in place potentially, which could lead to a rally in prices. We see that the GoNoGo trend indicator has painted a stronger blue bar today at the time of this recording. So that might indicate this go trend is going to remain in place and be healthy. Of course, the final confirmation would be whether or not the zero line holds as support here. We can see a little bit of a tug of war between the bulls and the bears. We can see the GoNoGo squeeze grid climbing. That tells us there's been some reduced volatility, very little directional momentum. So we're going to watch to see in which direction that squeeze breaks. A break back into positive territory could well suggest an attack at a new high. So also look at here.
Absolutely. And just for a little longer term perspective, let's pull this out to a weekly view just to see where our next resistance area is on this chart.
Yeah. We've got these really important prior highs here from September, October of last year. You can see we clearly broke above that horizontal resistance, and we've been racing away higher. But as we get closer, we could expect some difficulties here with these prior highs looming on the chart.
Absolutely. Let's take a look at oil as another macro factor, certainly at play. Depending on how you measure inflation, if you strip out all the volatility of food prices and energy costs, but as some of the commentators were saying, it's getting more and more difficult to pull those out of core inflation numbers because the fuel prices are affecting things like airline tickets and basic services. What are you seeing in this chart of oil right now, Alex?
Well, oil, to be honest, oil was looking a lot like the dollar and a lot like Treasury rates, and another macro factor that was having an impact. But maybe is this leading those others lower, or is this completely unrelated? I guess that's the question for analysts, and for us, we just want to look at the charts. But clearly, with oil, we saw this big pullback, and then we saw a clean break into negative territory on heavy volume for the GoNoGo oscillator, and that has now led to a change in trend. As you can see, we've gone into NoGo bars with the oscillator in negative territory. So we've been looking at these three sort of factors, rates, the dollar, and oil, over the last several weeks or even several months, and they were moving in the same direction. And now this one has turned. So it'd be interesting. Will this lead the others lower? Will they move together, or are they just unrelated at this point?
Absolutely. And let's pull up a chart of gold. Just take a look at precious metals and see what we're experiencing in terms of a trend here.
Yeah, I mean, much like bond prices, this chart, but gold has seemed to have been acting on its own impulses for years now. So gold is certainly in a no-go. We made it that really significant lower low. We can see prices rallied this week, but we're now back testing the zero level with the oscillator. So lots of volume in the gold markets using the ETF, of course. But we will want to see whether or not the zero line acts as resistance here and turns prices lower again.
Absolutely. So, of course, the events of last weekend, the outbreak of war between Israel and Palestine on everyone's mind. And for those of you who have family and friends in the region, that conflicts like this bringing about atrocities on all sides, and the loss of innocent life. What we're seeing from geopolitical instability in the region certainly has not had the sizable impact we might expect with the atrocities that we're seeing on social media and news media broadly. Janet Yellen came out this morning explaining that indeed we're not seeing heavy market impacts, and watching some of these macro charts separating the humanitarian crisis from our investing discipline. Technical analysis continues to give us these tools to separate some of the narrative and our emotions from what we need to execute on as investors. So really important to keep an eye on the charts. That's where we're going to see the information show up first. Alex, let's turn our eye back to US equities. Let's take a look at the S&P 500, but let's get under the hood and take a look at the GoNoGo sector rel map. That's going to explain to us a little bit about the nature of this last week's rally, what has been leading us higher. Again, for those of you new to the show and new to some of these concepts in technical analysis, relative strength is simply dividing one security by the other for a comparative view. And we're taking that relative strength line and applying the GoNoGo methodology, that trend model, to these ratio charts, each of the sector ETFs against the benchmark index, S&P 500. So from the top to the bottom, we've got information technology, consumer discretionary, and communications in those top three panels. That is where we're seeing the leadership. So from a strong no-go trend to a weak no-go in those consumer discretionary shares, but we do see technology and communications leading this market higher. For weeks, we've been talking about the energy segment. We've been talking about the outperformance of the XLE to the S&P 500. That trend has rolled over on a relative strength basis. Alex was just showing us that chart of USO, which certainly is a large contributor. We have talked about exploration, production, integrated oil and gas companies, a lot of different industry groups within the XLE that rotated their leadership over the course of this trend. It does seem, for the time being, to be losing its leadership status, and we can see that the XLK and the communications sector are what's leading. Both the defensive and cyclical sectors have really rolled over and showing us some signs of underperformance. So, Alex, as we do each week in this top-down perspective, once we identify those sector groups that are leading, thinking about how we want to position our portfolios from an asset allocation perspective, but also for finding trade ideas. As they say, we got to go fish where the fishermen are. Let's dive into the XLK and take a look at the industry groups in terms of where the leadership is coming from, more specifically within the information technology sector. And there it is. A single industry group outperforming the sector.
Yeah.
And so that more narrow leadership coming from the software segment. DJUSSW is an index of software companies within the XLK. And we can see that that's where all of our leadership has been coming from for several weeks. This week, some rollover in other industry groups as well. So when we dive into the software segment, Alex, let's pull up a chart of just the DJUSSW on an absolute basis. That way we can see what's happening from a price action perspective. There we go. So again, when we're looking at relative charts, it's outperforming the sector group that's outperforming the benchmark index. Remember, the benchmark index has been in no-go trends. So here's a look on an absolute trend basis of that price action for the internet, for the software companies index. Alex, talk to us a little bit about some resistance levels that are popping off of this chart.
Yeah, it's just like we've said a number of times, relative outperformance doesn't mean that in a pure trend they're going to be in go trends just yet, just that they might be going down less than their benchmark index. And that's really what we're looking at here. Rather than no-go bars, we're seeing amber bars. We're seeing some uncertainty as it came out of the no-go trend that it was in. We also can see that the oscillator is further into positive territory. We saw on the daily chart of SPY, we were just ticking up into that positive area. Now we're significantly in positive territory when we're looking at this software index. So relative outperformance, not necessarily a go trend just yet. Talking of resistance on the chart, we've got prior highs from September. We've got prior highs, of course, as well from July. But a better looking chart in some respects. It's also interesting, Tyler, that we've had this conversation now for such a long time with friends, colleagues, analysts about the lack of breadth, right? The leadership, or sort of the driving of the outperformance in equities not being sort of as general as you might want. And you can see that even in the areas of the markets that are outperforming, rather than just small cap versus large cap, you can see that it's only a couple of those sector groups that are relatively outperforming. It was just communications until a couple of days ago where technology came back into relative outperformance. And then even within technology, it's only this one subgroup. So you can look at breadth in a number of different ways like that and who's taking part in price movements. And it's interesting that it's quite thin, the leadership at the moment, even when you look at it in that respect.
Yeah, at the end of last week, I was with a bunch of students who run a portion of their university endowment and are practicing portfolio managers. We talked at length about the concept of breadth. And of course, I was referencing the 1990s Chicago Bulls. We were in Chicago, but none of these children were born before when Jordan was winning championship rings. But the 90s Bulls had a really deep and profound bench of players, Scottie Pippen and Dennis Rodman, and everybody had a job to do. And it was collectively that effort that made them such a championship team. As a Minnesota Vikings fans, we've had some real star players, Alex, but can't seem to get the job done because there isn't a deep enough bench there.
I hold my hands up here as a Jets fan, so you don't want to
I'm
be
so
me.
sorry, Alex.
You don't want to be me.
My sympathies go out to you. Fantastic. Let's dive into the software industry group with a couple of individual securities that are setting up in very strong trends. Starting with VMware. It's a large cap cloud computing. Wow, say that 5 times fast. Large cap cloud computing company, VMware, ticker VMW, breaking out of that ascending triangle on some really strong price action today. And this was the other piece that I tried to point out to the students. Deep financial statement analysis, understanding the fundamentals, understanding growth metrics, whether it was expanding margins or return on equity, strength of balance sheet. You can name many different metrics that you could look at. All of that is being distilled into price. So I'm not sure what announcement may have happened today, what attracted investors or perhaps a single big player to take a large position in this company. But it's going to show up in price. And there's an elegant simplicity to distilling all of that fundamental information into a single variable, which is price. Really clear breakout here on this chart at an extreme overbought level of 6 on heavy volume. Alex, in terms of a trading plan around a chart that looks like this, talk to us a little bit about what you might expect to see from here on out.
Yeah, this is where you get into that realm of not telling people what to do, but giving them the tools and the evidence, hopefully, to make sensible decisions when investing in the markets. And there's going to be plenty of people here that will look for a pullback and look for a retest, having had such a significant break. Now, there is also an argument to say that sometimes things don't come back. If it's moved for a reason that strongly, you might want to grab its coattails and see where it goes. But with price being moving so quickly, with the oscillator being overbought on heavy volume, you know as well as I do that a lot of the people we work with treat extreme overbought conditions as a sign of market enthusiasm and therefore a sign of strength. But you could always look for the counter trend correction arrow that will come when the oscillator falls out of overbought territory. And if it does drop to 0, then you'll get another green go trend continuation icon if it finds support once more at the 0 line. But remember, what often happens then is even if that does play out, that may be a higher low that you're then entering in on. So, it's sort of arguable as to what your actual strategy should be. But that's one of those things where you want to be aggressive, or you want to wait and get a bit of confirmation first.
Let's pull this out to a weekly view just to give some more historical context as to where we're coming from.
Yeah, I mean, that's a beautiful little triangle on the weekly. Just that clean break with the 1 weekly bar. We've been in positive territory. We've had those continuation icons. You can see that last counter trend correction arrow led to some sideways price action, but a real resurgence of strength in the go trend with a strong blue bar and the oscillator staying in that very positive territory.
Brilliant. Let's move on to another one. Let's look at Bill.com, payment processing software. And yeah, we could start with the weekly view. No problem.
Yeah, this is very interesting. I like to look at this kind of chart setup on the weekly because you're seeing a real sort of battle almost for the go trend to continue. So you're seeing the struggles that it's had to maintain the go trend, but generally speaking, we've had go bars, we've had some amber bars in here, but we haven't had any no-goes since that go trend took hold a couple of months ago. Oscillator broke above 0, has been largely finding support at the 0 level, and now we're retesting at some resistance levels that we see here on the chart. These actually were drawn on the chart on the daily, so we'll see what that looks like in a minute. But having struggled like this, sometimes you're almost building a base within a new trend. So rather than thinking of a base at the bottom, it's almost as if we've broken out and now we're building a base that could perhaps propel price higher. So I like that kind of struggle a little bit on the weekly chart. And if you look forward at the daily, you can see that area of support and resistance that really price has been fluctuating between. And we're right at that level again. We're seeing some amber bars, some go fish bars, but positive oscillator down below. And you can see that if we break above that, that'll be a positive sign that'll translate back to the weekly chart as well.
It's interesting also to see how this lines up against broad market activity, right? Bill.com had a gap higher in May, rallied through the summer months, as did the broad equity indices. We have that breakout above the resistance line you've got there at the top of the channel. That was in July. And we saw it, pull back to the retest. And just about the time that markets began a seasonally very weak period, and we saw a rollover at the index level, Bill.com kind of went back into its channel, and it's been, vacillating or oscillating back and forth from the highs and lows of this channel. So in thinking about, what the pre-existing trend was before we came into this period of seasonal weakness, I think there's certainly a lot to consider there in terms of where we might be headed in reclaiming those prior highs from July. Amber neutral bars right now from a trend perspective, obviously still within that channel, but the momentum oscillator breaking out strong to the upside. We're at a positive level of 5. and we'll see if we can mount an attack on those on the top end of that channel.
Yeah.
Certainly, from a trading perspective, you've got really clearly defined risk reward above the top end of that channel should it break out, and a very clear level at 120 to trade against.
Yes.
Let's turn our eye to Adobe. Sometimes the bane of my existence, working in PDFs, much too frequently. But let's take a look at a similar setup here in terms of retesting the top end of that channel.
Yeah, just a sort of a similar chart as you said. We've had quite a long period really of sideways movement. If you think about this Go trend maybe stalling around here, we've got quite a lot of sideways movement. We've had a correction that pushed the indicator to paint some no-go colors, another break below zero, but we're now back above zero. We're back testing that resistance level from these prior highs. So, again, could go one of two ways, right? And I think that's the important part, to have those clearly defined risk parameters, because this could break out and you could look to be positive about the direction of price with some clearly defined risk. If it comes back and breaks below this horizontal level, then you might decide, okay, that didn't work, and you get out. Or if it gets rejected at the top of this channel, right? If you imagine this is a channel, then you've got a clearly defined trade to the downside. And again, if that doesn't work, then you'll break above this resistance level and have a clear exit strategy as well. So very interesting to see which way we go with these securities. Absolutely.
So from all of us here at GoNoGo Charts, appreciate you joining us every week to take a look at the markets. For those of you who are in India, I look forward to seeing you all next week. Monday in New Delhi, Tuesday in Bangalore, Wednesday, Thursday, Friday in Mumbai. We have a lot of different events happening with broker-dealer networks, asset management firms, and of course with the CMT community as well. So if you are in any of those three cities, make sure to come out, say hello, share some gulab jamun with your old friend Tyler. And then the following week, I'll be joining our CMT crew in Abu Dhabi and Dubai in the United Arab Emirates, and looking forward to meeting a whole lot of new friends and some that it's been years since I've seen. So from all of us here, please take care of each other, trade them well, and we'll see you again real soon.